Hey guys, welcome to Learn Extra Exam Revision with myself, Mahesh Lal. Now in today's lesson, we're going to be focusing on stock valuation. Okay, an absolutely important section that you need to be familiar with because it must be in that final exam and even in your prelim examination. Right, now in today's particular lesson, what will we be focusing on in terms of stock valuation? We're going to be going through a question that's going to be focusing on the first in, first out method, in other words, your FIFO, as well as weighted average. Now remember guys, when a business values their closing stock at year end, there are three methods that they can choose from in terms of the type of stock they sell. The first is your first in, first out method. The second, weighted average. And the third method, something that I am not going to be focusing on in terms of the question that we're going to be going through, but you need to be familiar with, is called the specific identification method. Okay, so just make sure guys, although we're not going to be focusing on this particular method, that you go through your work and you are familiar with all three methods of stock valuation. Right, let's get straight into the question. Let's now look at the information that has been provided. The accounting records of Jodha stores is as follows. We've been given opening stock. Okay, then we've been given purchases, and remember, if you look at your purchases, it normally represents what you've purchased for the entire year. In this case, it has been broken down for us, so we made purchases in the month of May, okay, then the month of October, November, and then finally December. We are given closing stock and then sales for the year. Now, if we read further, if we look at this table further, you're given units, the unit price, in other words, the price of one unit, and thereafter you're given the total rand value of your stock. Now remember guys, something that you should do at the beginning, especially in terms of this table, the number of units times your unit price will give you your total value of stock. Okay, you guys got that. Number of units times the unit price, the price of one unit, is going to give us the total value of our stock. Right, now looking through this, we've obviously looked at our table. There's a few unknowns, but we're going to get to that when we're doing the actual calculation. Let's now read further. The shoes bought in November 2013 were imported. Import duties paid amounted to 15,000. Okay, important bit of information. The purchase that we made in November, because we've imported these goods, obviously from another country, you've got to pay import duties. Now remember guys, what does this do to the value of your stock? If you've got to pay any carriage on purchases or import duties, in this case it is import duties, the value of your stock is going to increase. I'm going to put a plus sign next to this bit of additional info. Right, next bit of information. 10 shoes purchased in December 2013 were defective and returned to the supplier. The supplier granted a full refund. Also very, very important, something that you definitely, I'm sure you're familiar with. The moment the business returns stock, what's going to happen to the amount of stock that they have on hand? Yes, it's going to decrease. I'm going to put a minus sign next to this bit of information. Okay, right, not much for me to read further because that's it as far as the info is concerned. So we're now ready to start with our very first question. So let's go for it. I hope you guys have your calculators with you because I'm expecting you to work with me. Right, our first question. calculate the weighted average value per unit on the 28th of Feb 2014, and they want us to round off to the nearest rand. Now remember guys, here we're talking about calculate the weighted average price per unit. Value refers to obviously price per unit. Now if I want to calculate my weighted average price, there is a formula that I need to remember. I need to first calculate my total value, and I'm going to underline the word value, total value of goods available. Let's just write that here. Okay, so I'm going to start by calculating my total value of goods available. This then will be divided by number of units that I have available. Okay, a big difference between the two. Total value of goods available refers to my rand value, the value in terms of rands that I've attached to the total amount of goods I have available to sell for the year. I'm going to then take this value and I'm going to divide it by number of units that I had available to sell during this particular financial year. Right, we're now going to build on this formula. Total value of goods available is calculated by taking the following. I'm going to start off by using my opening stock. I am then going to add purchases, and this refers to your total purchases for the year. I am going to add any carriage on duties or import duties. In this case, there is import duties, and I need to finally subtract any returns that were made by the business, and that's going to give me my total value of goods available. This then gets divided by number of units available. How do I get number of units available? I'm going to start again by taking my opening stock. Let's just change the color. Opening stock, but remember here I'm referring to the physical units that I have available at the beginning of the year. I'm then going to add on my purchases, not the rand value guys, but again the physical units that I have available, minus any returns that were made during the year. And again, when we talk about returns, we're talking about the units that were returned, the number of shoes that we physically returned. Okay, now once I have got this, guys, now it becomes easy, it becomes straightforward. Remember, in the exam, this particular question carries close to 9 to 11 marks. So it's very, very important that you show all calculations, because in the event of you getting that final answer incorrect, we can give you part marks. Okay, I need you guys to remember that. Right, so let's now go to my information and let's now look for these figures. Okay, right, I'm going to start off with my opening stock. So at the beginning of the year, I am looking at the total value in terms of my opening stock. So the total value is 29,000. So let's take that through. Okay, so opening stock, the rand value, 29,000. Okay, let's stick with the pink. Okay, so I've got 29,000, and I'm going to put a rand sign in front so we know we're dealing with the value of goods available. So at the beginning of the year, 29,000 plus, what's the next amount that I need? I need the rand value of my total purchases for the year. So let's now go back to our table and let's look at our total purchases for the year. So during the year, we purchased goods in May for 100,000. Then we purchased for the month of October 330,000. For the month of November, we purchased for 127,000. December, we've purchased for 16,000. Okay, so in order for me to get my total purchases, I'm simply adding all my purchases for the year. So let's get our calculators out. Okay, and let's do this. We've got 100,000 plus next purchase 330,000 plus 127,000. Okay, and then finally the last purchase was 16,000. Okay, so my total purchases for this financial year, 573,000. So let's fill this into our answer sheet. So we've got 573,000. Okay, next amount that I now need my import duties. Okay, so I'm going to add on, did I pay any import duties? We know we came across that, so let's go back to our information. Further down, we've got import duties. Shoes bought in November 2013 were imported. Import duties paid amounted to 15,000. Now remember guys, on the previous slide, I put a plus sign, meaning that we're going to now add on our import duties. So let's do just that. So import duties that we're going to add on, 15,000. And again, I'm just going to quickly add that rand sign. Right, returns I need to subtract, so minus the total value of my returns for this financial year. So again, back to my information. 10 shoes purchased in December 2013 were defective and returned to the supplier. The supplier granted a full refund. So remember, we are returning 10 shoes. So if we go to the month of December, okay, in December, we obviously purchased 100 units. The unit price was 160. So if we are returning 10, the amount of refund that we're getting back, we're obviously going to take our 10 shoes times the purchase price for one pair of shoe was 160, which means we're getting a refund of 1,600 rands. Right, and like I said earlier on, any returns is going to obviously decrease the value of your stock that you have available. So let's now go and subtract our 1,600 or 1,600. So minus 1,600. Okay, right, the top part of my calculation is done. Now let's focus on the bottom part of this formula. Okay, so I'm going to quickly change, let's just put a line through, and let's now change the color so that we're obviously focusing now on the bottom half of the calculation. We're going to start off with opening stock, number of units that we had available to sell at the beginning of the year. So again, let's go back to our information. At the beginning of the year, my opening stock, number of units, is not given to me. Unit price, however, 200 rand. And the total 29,000. Now remember guys, if I want to now calculate the number of units, okay, I know you know how to do this. Let's quickly make sure that you remember how. If I want to calculate the number of units, I am now going to take my total, which is 29,000. I'm going to divide my 29,000 by 200 rand per unit in order for me to get the number of units that I had at the beginning of the year. Very straightforward calculation, but what we often find students doing, instead of dividing, they forget and they multiply instead. So this is a common mistake, guys. You cannot make this mistake in your exams. So let's get that calculator out. The total value of my opening stock, 29,000, divided by 200, and the number of units that we had available at the beginning of the year, 145 pairs of shoes. So let's fill that in. Okay, so we had 145. We're now taking this 145 to our calculation. Okay, so opening stock units, 145 pairs. We're now going to add purchases, but remember now we're focusing on units. In total, how many units did we purchase during the year? Okay, so back to our table. There's our units. So we purchased 400 units, then we purchased another 1,200 units, then we purchased 300, and then finally we purchased 100. Okay, so let's take out the calculator. Easy calculation, but remember, sometimes important for you to use the calculator, guys. So 400 plus the 1,200 plus 300 plus the 100, which is 400, okay, to give me total units purchased during the year, an amount of 2,000. All right, so let's record this 2,000 as our purchases in terms of units for the year. Right, final part of this part of the calculation, we're now going to subtract any returns. Okay, we came across returns, but let's read through the information one more time. Okay, towards the bottom. Okay, how many pairs of shoes were returned? 10 pairs. Purchased in December were defective and returned, and remember we're focusing on units, so 10 pairs of shoes were returned, so we are obviously subtracting the 10. Right, I've got all my figures in place. All that's left for me to do is add and then obviously divide in the end. So let's carry on with the calculation. Right, I'm going to get my calculator out. So at the top, 29,000 plus 573,000. Okay, plus the 15,000, that was your import duties, and then finally minus my 1,600, the value of my return. Okay, and that's going to give me a total of 615,400. Okay, so 615,400. Okay, so that's giving me the total value of goods available. Okay, remember, total value of goods available. Right, let's look at the bottom calculation. 145 plus 2,000 minus 10. Quite a straightforward calculation, guys. Okay, but again, I'm going to just quickly get the calculator out. So 145 plus my 2,000 minus my 10, and that gives me 2,135 units that were available to sell. So 2,135 units. This here, remember, this refers to my rand value, and the bottom refers to the number of units that I had available to sell. Okay, right, I can now calculate what is my weighted average price per unit. And again, let's just get the calculator out one more time. So if I take 615,400, okay, and I'm dividing that by 2,135, that's giving me 288 Rand 24 cents. But remember, the question wants me to round off to the nearest Rand. So if I round off, 288 Rand. So on average, a pair of shoe, the cost price is 288 Rand. Okay, guys, I think it's time for us to take a quick break. I think run to the kitchen, get something to drink, and I'll see you guys right after this break. Welcome back, guys. Before the break, we calculated the weighted average price, and we're now ready to move on to the next part of the question. Right, 1.2 wants us to calculate the value of inventory on hand on the 28th of Feb 2014. Right, so this particular question, what is the total value of our closing stock? Right, let's go for it. Straightforward, guys, not difficult. In order for me to calculate my total value of closing stock, remember the business uses the weighted average method, I am simply going to use this very simple formula. So I'm going to take the number of units that I have available at the end of the year, in other words, my closing stock unit, and I'm going to multiply this by my weighted average price that I calculated in the previous question. Okay, so not difficult, not a difficult calculation at all, but remember, guys, again, very, very important for you to take into account the information that was given. Right, so let's start off by calculating what is the number of units on hand at the end of the year. In other words, how many pairs of shoes are sitting in the storeroom and hasn't been sold at the end of the year. So let's go to our information table and let's do that calculation. Now remember, guys, we're focusing on closing stock, number of units that we have at the end of the financial year. And I'm just going to quickly erase this. Okay, let's just write our opening stock that we calculated, 145. Okay, right, now that that's clear, we're focusing on units, number of units that were unsold at the end of the year. Now, at the beginning of the year, my opening stock, I had 145 units. I then purchased 400, then I purchased another 1,200, I purchased 300, and then finally I purchased 100, which means that I've obviously purchased in total, we did this calculation earlier, I'm sure it was 2,000 units. Okay, now what's going to happen to my opening stock? If I've purchased more units, obviously the stock that I have has to increase. I'm going to add on 2,000 units. The sales for the year, I've sold a total of 2,000 units, which means how many units do I have unsold at the end of the year? So let's take our calculators out. Let's look at this particular calculation. So at the beginning of the year, I've got 145 units. Okay, so 145. I then purchased plus a further 2,000 units. Okay, so at this point in time, I've got 2,145 units. Did I return any units? Remember, we came across returns. If we go further down, okay, we returned 10 shoes that were purchased in December. So the number of goods that I have available to sell has to decrease. So I'm going to obviously subtract the 10 units. And the number of units that I have available to sell, 2,135. That's how many pairs of shoes the business had available to sell for this financial year. How many pairs were sold? So if we go to the bottom of the table, sales, we've sold 2,000 units. Remember, we're trying to calculate how many pairs were not sold. What was the closing stock units? So if I subtract my 2,000, the number of shoes that were not sold at the end of the financial year, 135 pairs. Okay, so it's not a difficult calculation, guys, but like I said, you've got to take everything into account when you're doing this particular calculation. So let's fill that figure in. So units of closing stock, 135 pairs of shoes were not sold. We're now going to multiply this by our weighted average price, which we've already calculated in the previous question. So if we go back, our weighted average price was 288 Rand per pair. So let's now fill that in. Okay, so we're going to multiply that by 288 Rand, and that's now going to give us our value of closing stock. So again, calculators out, 135 times 288, and that gives us a value of stock 300 or 38,880. So let's write that down, 38,880. So this is the value of our closing stock. Okay, you guys with me? Right, let's now move on to the next question. The third question wants us to draw up the trading account to determine the gross profit for the year ended 28th of Feb 2014. Right, so they want us to complete a ledger account. Now remember guys, your trading account is a final account, and I'm going to quickly remind you, it is owner's equity minus on the debit side plus on the credit side. What gets closed off to the credit side of this account? Absolutely correct. We're going to close off sales as well as our closing stock. And remember, this is happening at the end of the financial year, 28th of Feb 2014. Right, let's start off with sales. So remember, again, we need to go back to our table, our information. Our total sales for the year was an amount of 1,200,000. So let's take that figure through to our T account. Sales for the year, 1,200,000. Okay, just remember guys, if the sales amount is not given, let's just go back to the table. If the sales amount is not given, how do you calculate your total sales? You're going to take the number of units sold, which is 2,000. You're going to multiply this by the selling price, which is 600 Rand, and that's going to give you your total sales. Right, so the total sales has been transferred to the trading account. Let's now focus on closing stock. Closing stock is the figure that we calculated in the previous question. So let's just go one slide back. And our closing stock was 38,880. Okay, so let's take that figure through. 38,880. Right, now I know a lot of you are probably thinking, but what happens if I get this amount incorrect? It can happen, guys. It is possible that this amount is incorrect. Can you be penalized twice in accounting? Never ever, guys. You can't. So remember, even though you could be taking an incorrect total from a previous question, in accounting we will give you a method mark for that. So remember, even though you've made a mistake in maybe the first question or the second question, you will not be penalized twice. Okay, I want you guys to remember that. Right, so we've transferred sales, we've transferred closing stock on the credit side. Now let's look at what happens on the debit side of this T account. On the debit side, again, it's at the end of the year, 28th of Feb 2014. Remember, this particular business uses the periodic inventory system. So on the debit side, I'm closing off opening stock. I will also close off my purchases. And here, guys, when I talk about purchases, I'm referring to your net purchases. Okay, and then the next item to also close off will be my import duties. It is also possible to have carriage and purchases. In this case, we didn't come across carriage and purchases. So those are the three amounts that I'm going to close off to my trading account. Right, let's start off with the value of my opening stocks. Again, back to my information. Opening stock value, 29,000. So let's take that through to our T account. Opening stock, an amount of 29,000. Right, let's now go to purchases. Okay, back to our information. My total purchases for the year, my total purchases, 573,000. Okay, guys, where am I getting this amount from? Let's just quickly recap. I'm simply adding all my purchases to get my total purchases, 573,000. But remember, when you transfer this to your trading account, you are transferring net purchases. What do we mean by net purchases? We're going to take our total purchases minus any returns. We did come across returns. So if we go at the bottom, remember we returned 10 pairs of shoes and we calculated our total return was an amount of 1,600. So when we're calculating net purchases, let's write this down for you. We are taking our total purchases, which is an amount of 573,000, and we are subtracting the returns of 1,600, and that gives us our net purchases that we close off to our trading account. So let's do just that. Total purchases 573,000 minus your return value 1,600, and that gives us your net purchases 571,400. Okay, so let's take that through. Purchases, net purchases 571,400. Okay, very, very important, guys. I did the calculation on the previous page, but remember, you are expected to show your calculations in brackets. And normally you'll find that in an exam, you are given space to show bracket work. What I often tell my students is use the top half of the line to show your bracket work and the bottom half of the line to show your details, because there's quite a bit of space that is given. Okay, net purchases recorded. Now let's look at our import duties. So we came across import duties. I think it was 15,000, but let's double check. There we go, it was 15,000. Import duties paid amounted to 15,000. So let's take that through. Import duties, an amount of 15,000. Right, what's the purpose of drawing a trading account? You want to calculate gross profit. How do I calculate my gross profit? I'm going to take everything on my credit side, subtract whatever I've got on the debit side, and that gives me my gross profit. So let's do that. Right, so let's do this calculation. 1,200,000, and I'm adding 38,880. Okay, so on the credit side, I've got a total of 1,238,880. On the debit side, obviously, guys, let's transfer the total on the debit side, 1,238,880. I'm now subtracting my 15,000 minus 5,714. Just fix that. And then finally minus my 29,000, and that gives me my gross profit 623,480. So let's fill that in, 623,480. Right, now remember, guys, this amount gets transferred to your profit and loss account, so your details will be profit and loss. Okay, right, we're done with the third question, calculating your trading account. Please, guys, please make sure that you learn your format for this trading account, because it's often asked in your exams. Right, I think it's time for another quick break. So again, guys, if you want to go and get something, maybe get a calculator or a pen or a page or whatever it may be, let's do that, and let's take a quick break, and I'll see you guys straight after the break. Hi guys, welcome back. Before the break, we completed a number of questions already on stock valuations. So if you've just joined us, we're now moving on to the fourth question on this particular topic. Right, the question or the information, they're giving us a bit of information first and then the question. The owner of Joda Shoes wants to sell her business. She approached you as the accountant and requested that you change the inventory valuation method to the first in, first out method, or the FIFO method, to create a higher profit, to enable her to sell the business at a much higher price. Okay, so you're given a certain scenario where the owner wants to sell her business, and in order to get the highest possible price, she wants to inflate, she wants to show a higher net or gross profit. Right, the question wants you to do the following. Calculate the value of inventory on hand on the 28th of Feb 2014 using the FIFO valuation method. Right, guys, in the previous question, we did a calculation of the value of closing stock using the weighted average method. We now asked to change our valuation method. What is your closing stock value if you've got to use the FIFO method? Right, now let's quickly do a recap. What do we mean by the FIFO valuation method? FIFO, first in, first out. Stock that I purchase first must be sold first, which means that my closing stock comes from my most recent purchase, because obviously the stock that I've purchased at the end will then not be sold. And what is closing stock? Closing stock is obviously stock that has not been sold. So let's do this valuation, but obviously now using the FIFO method. So we're going to start off again by looking at the number of units unsold at the end of the financial year. We did this calculation earlier on. So let's go to our information table. I think I filled in the amount already. Our closing stock, number of units that were not sold, 135 units. So we're going to take that through to our answer sheet. So at the end of the year, we've got 135 units that were obviously not sold. Right, now when we are valuing this stock, we're going to look at our very last purchase. So again, let's go to our information table. We purchased in May, October, November, and December. So our most recent purchase has to be the month of December. How many units were purchased in December? We purchased 100 units. However, grade 12s, were there any returns? Okay, very, very important that we read through our information, because we did come across returns. Right, 10 shoes purchased in December were returned. So remember, did we really purchase then 100 pairs? No, we didn't. We purchased 100, but we returned 10, which means for the month of December, what was our actual purchase? Absolutely correct. It was only 90 pairs of shoes. So let's take that through in the month of December. Okay. So we've obviously got 90 pairs of shoes that were purchased in the most recent month, which was the month of December. That 90 pairs of shoes were purchased at a cost price of, let's go back to December. December, we purchased each pair at a cost price of 160 Rand. So when we are valuing this particular stock, okay, the 90 pairs times 160. Okay, so we're going to get for this particular purchase, let's get our calculators out. Okay, so we've got 90 times the cost price was 160. And that's giving us 14,400. So that's the first part to our calculation, 14,400. Okay, you guys got that. Right, let's now move on. The second part to this calculation, remember in total, we had 135 pairs. From that 135, 90 obviously comes from the month of December. Let's now look at the next purchase, not next purchase, but rather after the month of December, what was the month before December and how many units were purchased then. Remember, the remaining amount will come from that month of purchase. So if we go back to our table, December, so we've looked at December already. We're now looking at the month of November. Now in November, we purchased 300 units, but how many units were unsold in terms of November's purchase? So again, back to our answer sheet, 135 units were on hand, 90 comes from the month of December, which means the balance, which is 45, it should be 45. 45 is coming from the month of November. In the month of November, if you look at the 45 units, what was the cost price for the month of November? 425 Rand. So there's our amount. Let's take that through. Okay, so that 45, we're going to obviously multiply that by 425. However, and this is absolutely important, guys, remember in the month of November, let's just go back to our table so you know exactly what I'm talking about. In the month of November, we paid import duties. And because we've paid import duties, what happens to the value of your stock? Absolutely correct. The value is going to increase. So let's look at the import duties that were paid on each pair of shoe. So if you look at the total that was paid, it was 15,000. Let's just write that down. So the total paid was 15,000. In the month of November, we purchased 300 pairs in total. So if we take the 15,000 and we divide this by 300, for each pair, the import duties amounted to 15,000. We're going to divide this by 300, and that gives us 50. Okay, so we can say we paid 50 Rand in terms of import duties on each pair of shoes. Now, if we go back to our question, what's now going to happen to our calculation? Okay, let's go to our answer sheet. Okay, so remember, 45 pairs obviously is coming from the month of November. We paid a purchase price of 425 Rand, but that obviously increased by a further 50 Rand that we had to pay in terms of taxes, in terms of import duties. So when I'm doing this particular calculation, okay, I want you guys to watch very carefully. Okay, my total price that was paid per shoe, 425 plus 50. So my total price is 475 times this by the number of shoes that were unsold for the month of November, which is 45. So if we multiply this by 45, we're getting a total value of 21,375. Okay, right. All that's left for me to do, what is the value of my inventory? All I'm doing now, guys, is I'm adding. So the 21,375, which is obviously the value of goods unsold for November's purchase, I'm going to add 14,400, which is the value of unsold goods for December's purchase, and that's going to give me my value of closing stock using the FIFO valuation method. Okay, so let's do that, plus 14,400. Right, and there we go, my value 35,775. Okay, right, let's now move on. Second part of the question, 1.4.2. Will it be ethical for the owner to change the inventory valuation method? Provide 2 reasons to support your answer. Right, now guys, I want to discuss this, okay? So I'm probably not going to write everything down, but what's important is how do we approach this question? And these are common mistakes that we find when we are marking your scripts. A lot of our students do not read. They're not reading the question properly, and as a result, they are not answering what was actually asked in terms of the question. Will it be ethical for the owner to change the inventory valuation method? That's the first part of the question. They're simply asking you for a yes or a no answer. Will it be ethical? Yes, it will be ethical. No, it will not be ethical. Then provide 2 reasons to support your answer. So remember guys, you're going to start off by saying yes or no. Now before we decide, let's go back to the information. The owner has approached you as the accountant to change the inventory valuation method. Now remember guys, the inventory valuation method, when a business decides on the stock valuation method that they're using, obviously the inventory, the actual stock that they are selling, or the type of stock rather that they're selling, will play a role. So for example, if I'm selling jewelry, gold jewelry, I'm going to use the specific identification method. If I'm selling an item such as vegetables, I will use the first in, first out method, etc. Okay, it's not important for you to know how they decide on the valuation method. What is important for you to know is that you cannot change your stock valuation method unless there is an extreme circumstance that occurred, and as a result you now have to change your inventory valuation method. We're not going to talk about that because this is things that you really don't need to know in detail. All you need to know is that you cannot change your valuation method because you want to inflate profits. Now, why does she want to inflate profits? She wants to sell her business. Someone's only going to buy the business if they feel it's a good investment for them. If the business is making a profit, obviously then they would take that into account in making their decision. So if you look at her reason for wanting to sell her or to change the stock valuation method, there is no valid reason. Okay, very, very important. So immediately guys, the answer has to be no. It is not ethical. And also, please bear in mind that if a business decides to change their stock valuation method, they need to obviously disclose this information. Okay, right. So our answer will be no. It is obviously not ethical. Not ethical for her to change her stock valuation method. You guys can obviously write this out properly. And remember, in your explanation, you need to mention that her reason for changing the stock valuation method, so her reason is to inflate. She wants to show a higher profit in her financial statements, which is unethical. You can't change your stock valuation method to inflate profits. If she does decide to change her inventory methods, there needs to be proper disclosure. Okay, what do we mean by disclosure? In your actual financial statements, there needs to be a note to inventory. Remember, in your balance sheet, when you draw up the inventory note, there needs to be a proper disclosure in that note that the stock valuation method was changed and what was the reason for it being changed. Okay, so a question on ethics, guys, another question that you will find often asked in your exams. Right, let's move on. The next question. Okay, let's just go back. Right, the next question. Briefly explain what does GAAP suggest in respect of stock valuation, and this is for 3 marks. Right, now guys, please remember, when you are disclosing your stock in terms of GAAP, which is the GAAP principle that you need to take into account when you are disclosing your stock? I know you know this answer because it's often asked. Absolutely correct. It is the prudence concept or prudence principle. Right, what do we mean by prudence? Simply that we need to show our stock at lower than or its net realizable value. Okay, guys, please remember you are not allowed to abbreviate in your exams. You need to write this in full. Prudence in terms of stock, lower than or net realizable value. And I know what you guys are thinking. Prudence means to understate. Okay, so we're understating, we're being pessimistic when we are recording our stock. In other words, we're obviously not overstating our stock value in our balance sheet. Okay, so 3 easy marks. Prudence principle. Remember guys, it's not the matching principle. This is the value of an asset. So remember, think of prudence. Right, and now we're looking at the very last question. Provide 2 differences between the periodic inventory system and the perpetual inventory system for 4 marks. Often the question will ask you to tabulate 2 differences between periodic inventory system and the perpetual inventory system. So let's just do that. Let's draw a table. Okay, so we've got the periodic system, and then the second inventory system is perpetual. Okay, what are the differences between the 2? Now remember guys, there are lots and lots of differences. Please make sure that when you're answering this question, you explain the differences. You don't simply list the differences between the 2. Right, let's start off with the periodic system. Now remember, periodic system, because they're selling a variety of stock, there is no constant markup. How does that impact on the accounting system? Because you don't have a constant markup, it means you cannot record your cost of sales at the time of the sale of an item. So let's write that down. There is no constant markup, okay, because you've got a variety of markups, and as a result, or therefore, cost of sales cannot be recorded at the time of sale. Okay, right, perpetual inventory system, okay, will be the opposite. There is a constant markup, because remember, perpetual inventory system, the business is selling one type of product and therefore uses a constant markup. So in this case, there will be a constant markup. And because there is a constant markup, therefore, cost of sales can be recorded at the time of sale. Okay, that's one difference. Let's now look at other differences. In your periodic inventory system, remember, there are no, instead of having a trading stock account, trading stock is now replaced by an account called purchases. So another difference, there is no trading stock account, or you can also say that the trading stock account is not updated. Instead, you've got a T account for purchases. Okay, so you've got a T account called purchases, not trading stock. Students also like to mention that every time stock is purchased, the purchases ledger account is debited. So there's a variety of ways in which you can word this, but remember, it's important that you are explaining the difference. Perpetual inventory system, here it's going to be the complete opposite. There is a trading stock account, and every time goods are purchased or goods are bought, okay, trading stock will be debited. Okay, guys. Right, we've listed two differences because that's exactly what the question wanted us to do, but remember there are many more differences, and if you don't know where to find the differences, remember, refer to your grade 11 textbook, because often in your textbook there are differences between the periodic and perpetual system. I'm talking about your grade 11 textbook, guys, because you did this section in grade 11. Right, grade 12s, we've come to the end of this lesson. I hope you learnt a lot. I hope that you guys now remember your stock valuation systems. Remember, guys, you need to practice, practice, practice. Good luck for your upcoming exams.